Well, good afternoon, ladies and gentlemen, and thanks to Dave for opening proceedings. Bell & House is actually our corporate lawyer, so they're always available for advice, and I actually asked Dave, can I just say, 1 million ounces, open in all directions, 2 grams a tonne, heading for construction next year, fill your boots and leave the stage, and he said no. So, we will stick with the disclaimer for you, Dave, but this is, well, firstly, thank you to RIU and Stewie and all the team for putting this on, and thank you very much for coming along to the first session on the first day. I think there's over 70 presentations ahead of you, so before that sensory overload occurs, I think it's wonderful to get in and provide you with what I think is a very simple and compelling story. So why simple and why compelling? As I just said, it literally is a plus million ounce. We're at 1.25 million ounces. We announced last week at just under 2 grams a tonne, but with 1.1 million ounces at nearly 2.4 grams within that. A large portion of that is indicated. It is outcropping. It is open in all directions, and that's basically a tripling of resource since listing in June 2017. We're into the pre-feas now, and all being equal, into construction at the second half of next year. The question we often get is why is such an opportunity? Why is 1 million ounces that is literally outcropping available in WA today? Why has it not been mined? And this is a story of consolidation. So this goldfield was first discovered in 1896. Had a bit of a boom time of about 15 years. The first railway in a Pilbara actually went Port Hedland to Marble Bar, not one of the iron ore mines. But because of that gold rush, it was very fragmented ownership. And by a process of 7 transactions over a period of time, we consolidated the area with some fairly unique characters that had held crucial parts of the deposit over the last 30 to 40 years. And that's what's unlocked this opportunity before us. Who are we? Well, it appears we're a bunch of crusty old ladies and gentlemen, because if you don't have 30 years, you don't get a seat at the table at Calidus. But I do think that's very important. Between the team, we've been involved in developing over 10 mines worldwide. The track record is there. We've created over $2 billion worth of shareholder value over time, and that's what we plan to do again at Calidus. I think the junior gold sector's gone through a bit of a rough trot of late, and into that transition into producer, and we just believe by following a sequential and logical process, ticking all the boxes, de-risking certain aspects, which I'll talk about later, this should be an area where shareholders get rewarded, and the team that we've assembled, we believe, can certainly do that. I won't touch too long on this. I'd like to get into the deposit itself. Capital structure, I think a couple of the key points. Alkane Resources came onto the register late last year. They're a gold producer in New South Wales with 80 million of cash and listed investments. And we saw that as a great validation of the work that we've been doing and welcomed them on board. We had 4 million cash at the end of last quarter, and over the current calendar year, we see up to another 7 million between options exercise and sale of liquid assets potentially flowing into the coffers to help fund the pre-feas and the feasibility going forward. It is slightly complicated. We're almost unscrambled the egg with performance shares. They will be issued on a successful pre-feas, so take it as written, and that's Q3. And so by the end of the year, a lot of the options out of the way, performance shares done, and we'll have a vanilla register at that point. So where are we? Just outside Marble Bar, hottest place in Australia, they say. 160 days in a row over 100 degrees Fahrenheit is the record there. And that's where Calidus comes from. It means hot in Latin, which we thought was quite appropriate. Nearest producers, Millennium Minerals, 100,000 ounce per annum, about 80, 90 k's away. Novo Resources, one of our shareholders, has a 700,000 ounce Beatons Creek deposit, about 70 k's away. And this is the area where Northern Star had its start. I had the wonderful opportunity to have my 21st at Bamboo Creek, so do know the area fairly well. If we zoom in to our tenement holdings, we basically control the whole greenstone belt now, bar a couple of postage stamps. over 200 historic old workings, and we've just scratched the surface at Klondike, which we'll talk about more. But outside of there, the regional potential we see here is fantastic. So zooming in at Klondike, which forms 92% of our total resource. So 1.15 million ounces in this one deposit, and what you're seeing here is where we were a year ago. We had 654,000 ounces. We did a lot of drilling, and we've now extended the strike to 5 kilometres of mineralisation, and we've extended it down dip as well. The two tables that you see, the top table is at 0.5 gram a tonne, the bottom at 0.8 gram a tonne for material above 180 metres below surface. And that's just to give you a feel for that open pit material. You'll see the grade moves from 1.6 to 2.2 without a great drop in ounces between those two cut-offs. So there really is a nice high-grade core there. Outside of that, as I said, it is open. We did a lot of drilling last year at depth with diamond tails, and we've proved up a very high-grade narrow marker horizon, which bulks out around it. We'll be looking at that further, and we'll also be looking out to the west. These are life of mine grades for some of the old workings that you see there. And as you can see, if it wasn't over basically 1.5 ounces a tonne, it wasn't mined. So that gives us a lot of optimism that we'll find more. And we'll be running an IP survey over there later this year to help delineate those targets for drilling. What's it look like? The photo here is looking down the strike of the ore body, old workings in the foreground. Outcropping into the distance. It's like a big tram track that just disappears into the distance. It is that simple, and as you can see, it is outcropping. It is a vertical ore body, so from an underground potential, it'll be a fairly simple mining, but to start with, it's just going to be one very big, long open pit. 150 metres to the north, we've got the St George Shear, which we drilled out last year over 1 kilometre, about 150,000 ounces. We've only drilled to 80 metres. And we see some pit interaction potential between these two shear zones, but all of this we call Klondike. Looking in plan view, you can see that 5 kilometre at Klondike, and to the north of it, the 1 kilometre at the St George Shear and the drilling that we've done. You can also see the outline of the MLs, the tenements we have here. They're 100% owned, have just been renewed for another 30 years, which obviously helps with the permitting process that we'll soon be entering into. Regionally, we haven't started to look at this, and there has been zero modern exploration over this tenement package in the past, and that's what gets our geos very excited in the office, and it's the work that's going on at the moment. So you can see we've looked at just one of those shears over 5 kilometres. Outside of that, we've also drilled 3 small deposits, just satellite deposits, where there's some previous drilling. There's 100,000 ounces in those deposits, and some very nice grades like at Copenhagen with just under 5 grams a tonne. And it's those sort of sweeteners that we'd love to chase and provide a greater ounce profile into the plant once we get operations developed. But outside those satellite deposits, what we'll be tackling this year, we did 4,000 soils early last year. We did another 4,000 soils late last year, which we will announce shortly. And what it's highlighted is there's a whole range of geological varieties that can host mineralisation. In the southwest of this diagram, there's a 5 kilometre by 1 kilometre soil anomaly. It looks like it's hosted in the porphyry. It's had 4 RAB holes drilled in it in just one little cluster, but has never been looked at. There's granite greenstone contacts, there's mafic inlayers, there's all sorts of opportunities that have never seen a drill hole. Basically what happened in the past, you saw an old working, you drilled under it. But as I said, if it wasn't 1 ounce, 1.5 ounces a tonne, the old timers didn't mine it. So those bulk low grade deposits that can make a lot of money have never really been looked at in the past. With the pre-feasibility study, that's now underway. We've been working for the last 6 to 9 months on all the inputs for that. And I suppose this is where our development experience comes in as well, is we're actually going to do this to a plus minus 15% accuracy, which is almost feasibility. That's for a few reasons, one of which it lets us start talking to the debt providers immediately. It really locks down the infrastructure as well as we progress through that, and just allows for a lot more confidence as we move through this process. Yet again, I think some of the gold industry have put out pre-fees, and then a bankable 6 months later, CapEx blows out 20%, and everyone starts to lose confidence. Met test work, we've done a lot of that. We've done a lot of variability test work, over 96% leach recovery, 60% gravity gold, a coarse grind, soft rock. It's about as good as you could hope for. We've done our heritage clearances on archaeological and ethnographic. Environmental, we've been monitoring for 2 to 3 years. We do have some bats in an old working. We know we'll have to go to the EPA because of that, even though we're not disturbing them. So we're well ahead of where we need to be on environmental. We've drilled all the water bores around the pit and done our pump testing. We've drilled all our geotechnical holes around the main pit, and analysis is underway. Tailings dams, all of that work's been done, and we're working with the department on final designs. So all of that's going to come into the pre-fees. We'll announce in the next day or two the lead engineer for that, and then Q3 we will deliver that. One of the advantages we have, apart from an outcropping gold ore body, is even though we might appear remote, we're not. We're only a 2-hour drive outside Port Hedland. Being there, obviously we can tap into the explosives and the engineering services that dominate for the Pilbara iron ore, our brothers nearby. There's access via Woodside now to trucked LNG, so we don't need gas pipelines or diesel. We can truck in LNG from Woodside and power the mine that way. The airstrip is a bitumen airstrip. We just need to upgrade that. That's only 20 k's away from the deposit, and we're looking at second-hand camps from some of the majors up there at the moment to keep capital down. So there is a lot to do there, and a lovely place to visit, and I highly recommend it if you ever get the chance. So where does that take us from a development timeline? Pre-fees Q3, we'll submit for those environmental permits Q3. Definitive fees will roll into H1 next year concurrently with that debt financing. As soon as we get those environmental permits, we'll then be in a position to commence construction later next year. We've obviously got the soils, the geophysics we talked about, and we're going to put 7,500 metres into some of those regional targets in Q2 and Q3, and then we'll be looking at infill and extensional drilling thereafter for the main deposit. Part of that infill and extensional as well, just to show how we're de-risking, we will look at grade control drilling for the first, let's say, 4 to 6 months of production ahead of construction, so we know it's all there. Also in our plans, we'll be looking at mobilising mining fleets earlier to knock the top off the ridges, build a nice stockpile and open up the mining area for the fleet, because we believe it's the revenue sensitivities that make or break a project. The capital and the construction are well and truly under control in Western Australia. It's the revenue side that we really need to be focused on. A couple of little charts to end with. So there's obviously quite a few open pit developers, mainly around 1 million ounce and 1.3 grams. We feel we're starting to get some clear air, and the value of those ounces, obviously you'd like to hope are greater over time, especially outcropping with the costs that we should be able to produce with that. The old comparison, I'm sure you'll hear it probably another 70 times, saying we're all undervalued, the explorer developers. But here's a chart to take away. We do have presentations at our booth, and Jane and I are manning it this afternoon, so please come and have a chat. But this is where we see the value proposition as we de-risk this project through pre-fees, as we prove up the regional and the extensional upside. We're very excited about where we could head for value for our shareholders. So in summary, we believe we've got the critical mass, we've got the grade, we've got the metallurgy, we've got the team that's done it before, we've got that funding in place through pre-fees and potentially feasibility. There's great infrastructure to piggyback off there. The greenfields hasn't even been touched, and we're very excited about that. And the cupboard is pretty bare for this type of story on the ASX. So as I said earlier, fill your boots, but no. Thank you very much.